Hi, this is Bruce at Turnaround Stock Investing, a community of value investors devoted to helping you find, buy, and manage a portfolio of turnaround stocks. Today I wanted to discuss steel equities. As many of you know, steel stocks have declined dramatically in 2015. This is a continuation of a bear market that started in 2011. A number of steel stocks are down anywhere between 50 to 90%. Right now we're looking at a chart for hot rolled band prices from 2001. As you can see, since that time period there has been a dramatic swing in prices for steel, in this case hot rolled band. But I want to pay particular attention to what's happened since 2013. In Europe, China, and the United States, prices have fallen 50 to 70%. Right now, we're looking at cold rolled coil prices. And again, you can see the dramatic decline in pricing for Europe, China, and the United States. Let's take a look at plate prices. And again, you'll see the dramatic decline in prices. And let's take a look at rebar prices, where we can see a really horrific decline in Chinese prices. Rebar prices have gone from $600 a ton to $232. And of course, here is scrap prices, which have also been pummeled. Right now, it's estimated that Chinese steelmakers are losing an average of $50 on every ton produced. This is an unimaginable amount of money. And in the United States, this type of loss would probably cause every steel producer to shut capacity and close its doors. However, given that the Chinese government controls a number of the large steel producers, they are allowed to continue to operate with these types of losses. And this is the principal reason that world prices have been crushed. In 2015 and 2016, it's estimated that China will export over 100 million tons of steel product. To get an idea of how that large it is, that is basically the equivalent to the steel that is produced in the United States. As a student of commodity bear markets for the past few decades, it's obvious that the only solution to solve this crisis is a cut in production capacity. My interest in now examining steel equities is because I am beginning to see signals that steel capacity is starting to be shut down in China. Right now we're looking at a steel index for steel products, flat products, and long products in China. And as you can see, since 2014, it has been a straight line down with various up movements. Right now, you can see that pricing for these various types of steel products is starting to move up. This also occurred at various times in the future during year ends. So it's important to watch now whether steel production cuts will start to take effect and actually influence the price of steel. The other interesting piece of data that came in, which prompted me to begin looking at steel equities, is that the imports into the United States of steel have started to decline. My initial thoughts that this occurred as foreign producers were concerned that during tariff negotiations, clamping down on steel exports into the United States may make sense. So while this is a very positive development, we have to look and see what happens in January and February. If steel imports still remain down, that is also a very bullish signal that steel prices in the United States may be bottoming. As a result of all of this data, indicating that it is quite possible we may be at the beginning of a bottom in steel prices around the world, I wanted to take a look at those stocks that had the most leverage to rising steel prices. Before you is a 20-year chart of AK Steel, and as you can see, the price of the stock is making a very long-term, actually triple bottom. We can see here that between 2003 and 4, it bottomed in the low $2 range. We came here in 2013, 2014. It tried to test this bottom, but actually stayed above it. And now we have come back to this $2.50, $2 region, which matches in 2004. This could be considered of extremely long-term double bottom. And if prices hold, that is sending a significant signal. Now, AKS is less vulnerable than, say, United States Steel, who I'm not showing right now, but whose chart has sort of broken down, because they are primarily an automobile steel supplier, that is AK Steel, which has allowed their volumes sold, tons sold, to remain stable. However, they are still suffering from price declines due to the worldwide declines. Right now, we're looking at an income statement for AK Steel for both the 3 months ended September 30th, 2015, and the 9 months. And what you could see here is that operating profit has actually improved quarter to quarter. And this is due to the significant amount of costs that have been taken out by AK Steel and also the decline in iron ore prices. We're now looking at a statement of cash flow for AK Steel for the 9 months ended September 30th, 2015. And as you can see, there has been a dramatic improvement in the cash flow provided by operating activities. It's gone to positive $200 million from a negative $380. As a result, AK Steel is actually generating free cash flow. If it keeps its capital expenditures down, in this case $70 million, it will be able to actually start repaying debt. And as you can see here, they actually did start reducing borrowings under their credit facility, a very positive development. However, looking at the balance sheet for AK Steel, we see a very leveraged balance sheet with $484 million in negative stockholders' equity against $3.5 billion of long-term debt. As a result of this balance sheet, there is not a lot of margin for error. Given the weakness in AK Steel's balance sheet, it's critical that we examine the liquidity that the company has and what near-term debt maturities are. As you can see in the slide presentation from the company's recent earnings presentation, they have $821 million in available liquidity. The bulk of this is from a revolver based on the company's assets. It's liquidity from an asset-based loan. We can also see that the company has no near-term debt maturities in 2016 and 2017. So while the company is extremely levered with a lot of debt against negative equity, it has liquidity and no near-term debt maturities. So if steel prices stay at the current level and start to rise from a reduction in Chinese steel production, causing prices to rise, the effects on AK Steel's profitability could be enormous. In this slide, you can see the impact that a price increase can have for AK Steel's performance. In the third quarter, they shipped 1.87 million tons of steel. If prices went up just $10 a ton, that's an $18 million improvement straight to the bottom line. The other significant development for AK Steel is that its pension contributions and VEBA settlement costs and benefit payments are all starting to decline dramatically. In 2011 to 13, these 4 categories of costs were escalating for the company and causing an enormous amount of cash to outflow of the company. However, these costs will be declining to actually 0 in 3 of these categories. Another very positive benefit that AK Steel is looking at. So, in summary, if steel prices are bottoming, AK Steel will be a major beneficiary. However, the one caveat is a potential recession. If the United States does enter recession in 2016 and 17, that will have a dramatically negative impact on the shipments that AK Steel is sending to United States auto producers. Take that declining shipments with a possible decline in selling prices, and very quickly AK Steel could be headed to bankruptcy. So this is a do or die moment for AK Steel. So we've looked at what's the potential for worldwide steel prices. We've looked at the financial statements for AK Steel, and we obviously know that the sentiment towards steel stocks is horrendous. So what's happening on a near-term basis to AK Steel stock. And what's the chart telling us? Well, as you can see, the stock was trying to form a bottom right around this level of 240 for a number of months. And with the recent decline in commodity prices, it suffered and broke this base. However, it's still holding in despite the enormous amount of bearish news regarding Chinese steel prices and the Chinese economy. Given its ability to hold in with all of this negative news, AK Steel should be on a watch list for a price movement above this moving average line. If we start to see the stock base out and actually start to move up on volume, that could be the signal of a point for entry into the common stock. I hope you enjoyed this video as we begin our discussion on steel prices and the effect it could have on steel equities in the United States. In following videos, I will be following up on AK Steel, so I hope you return to the site and become a member of Turnaround Stock Investing.